Is Revlon a hype train worth hopping on? Let's start the countdown and find out. Welcome back to the Investor Place Launchpad, where we take a look at trending investment ideas and try to rocket them to the moon. I'm Head of Mission Control Aaron Davis, and this week we're examining some of the hype and drive surrounding beauty company Revlon, from a potential buyout and speculated short squeeze with its stock. As always, before we dive in, we'd love to continue to grow our channel here at Investor Place, so feel free to hit that like and subscribe button and smash that notification bell to stay up to date with us here at the Launchpad. With all of that out of the way, let's dive right into what's going on with Revlon. The past month has seen Revlon on an incredible ride, with the stock plummeting to around $1 a share after the company's announcement that it would be filing for bankruptcy, citing supply chain issues, as well as $3.3 billion in long-term debt as of the end of the first quarter of 2022. While bankruptcy is typically synonymous with stocks losing nearly all their value, Revlon has seen a rally thanks to its continued online popularity as a meme stock. What makes a meme stock? Well, generally one that's been popularized over the retail investor online community through forum-based communication like Reddit's Wall Street Bets. This popularization seems to be driven by two main factors, which include a buyout rumor and the stock seeming to be targeted in a short squeeze, which is fueling investors to chomp at the bit. These speculations have helped the stock jump from around $1 on June 13th to a price of around $7 as of the end of last week. While all of this is promising to investors in the short term, Investor Place contributor Joe Bagloli is quick to point out that the stock is in no way a safe play right now, and that Rev stock could collapse if investors decide to pump and dump, or if a suitor for the company fails to materialize. Bagloli states, "If Revlon is left to rearrange its debt load and eventually emerge from bankruptcy protection on its own, its stock is likely to decline and would quickly fall below the $1.54 it was trading for when the company filed for Chapter 11. Also, the New York Stock Exchange has started the process to delist Revlon stock should the company fail to successfully reorganize and recover." IP contributor Chris McDonald shares similar sentiment to the meme stock and suggests, "I don't think investors should touch Revlon at these levels. Sure, this stock could continue rallying from here. Momentum does its thing and anything's possible. Indeed, we've seen what's happened with squeezes in the past. However, there's ultimately no fundamentals supporting a move like this. When there's ultimately no fundamentals supporting a move like this, the downside with such a trade is often as violent as the upside. This could get messy fast." While time will ultimately tell what Revlon's fate will be, it's clear to all that the surge in price has been driven by retail investors attempting a short squeeze similar to other meme stocks like GameStop, AMC, and more recently Hertz. Despite the rally, many seem to think that the party is about to be over, including Wilton Reisenhoover, founder and CEO of market analytics platform Fintel, believing the short squeeze is about to come to an end. Reisenhoover knows that Revlon's surge has been driven by retail investors, as evidenced by recent data from Fintel. The fact that Revlon volume increased significantly in our panel in the last week helps confirm that retail has played a part in this run-up, Reisenhoover told Investor Place. He also added that this type of buying strategy doesn't yield positive long-term results for investors, stating, "In most bankruptcy proceedings, equity owners typically get wiped out and the debt holders take control of the company. With that in mind, anybody still holding equity shares of the company through the legal proceedings is likely to see the value of their investments go to zero." This, of course, was the reason for the high levels of short interest in Revlon going into this squeeze. In the end, it seems that Reisenhoover is firmly convinced that the short interest that drove Rev stock up is already pushing it back down, concluding, in terms of key metrics to track, the level of short interest remains key. As short sellers unwind their positions, pressure will decrease. It is likely that all institutional investors are exiting their positions right now, short sellers at a loss and long sellers at a nice profit. It seems that the smart play at this point is to steer clear of Revlon, as the hype and rallies seem to be coming to an end. But there are certainly some stocks to watch that could be the next Revlon. In fact, Investor Place financial news writer Samuel O'Brien suggests that there are three looking at bankruptcy that could turn into the next meme stock. For the full breakdown, you can head on over to investorplace.com, but O'Brien cites Reisenhoover's thesis on the characteristics of what makes a meme stock, quote, "a well-known brand that is in trouble and could possibly be saved," end quote. O'Brien suggests that the following stocks are aligned in similar positions that could potentially be the next Revlon. These retail sector stocks include Gap, an iconic retailer that has reported too much inventory, among other problems. Abercrombie & Fitch, a brand that young Americans remember fondly, could be a meme stock contender. And finally, Capri Holdings, a company that owns several high-end brands but has reported excessive debt. Gap has been a likely candidate for bankruptcy since the early days of the pandemic, when it began closing stores at an alarming rate, with Business Insider reporting that by 2024, only 870 out of the 1,216 stores will still be open in North America. O'Brien concludes that GPS stock has plunged almost 50% year to date, and there's nothing to suggest a turnaround is in sight. But it still remains one of the most well-known brands in American fashion. If it goes under, the R Wall Street Bets crowd will be tempted to step in. Meme stocks have certainly changed the landscape when it comes to retail investing, and at least in Revlon's case, created an opportunity for a rally and a short squeeze. But what do you think? Are meme stocks a viable investment strategy? Is Revlon about to see a pump and dump? And are other companies set for a meme rally? We'd love to hear your thoughts in the comments section below. Well, that's all we have for the Launchpad this week. If you'd like more insights like this and Samuel O'Brien's full breakdown of the next potential Revlon, you can head on over to investorplace.com, where we release articles daily. And as always, check back with us here at the Launchpad, where we will continue to look for trends like Revlon and meme stocks. And as always, try to shoot for the moon.